Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Hey guys, welcome back to a really crazy week. I mean, if you've missed it, the market just exploded higher in the past week. Bitcoin is up 21% for the week. ETH is up 28%, and a lot of other tokens are up even more than that, some of which we are going to cover today. The other big announcement is that Coinbase announced the launch of tokenized stocks on Base Chain, which is a big step forward for them in bringing tokenized equities to all. But we're going to get started and talk about some specific tokens today. So first up, we're going to talk about LayerZero. So yesterday, LayerZero, the interoperability protocol, announced the upcoming launch of Atlas. Atlas stands for Aggregated Trading, Liquidity, and Settlement. It's basically trading infrastructure on Zero, which is LayerZero's upcoming layer 1. So basically, Atlas is designed for trading venues in either crypto native or traditional finance to plug into and use for matching, clearing, settlement, and risk. And the idea is that, as this infrastructure component, Atlas will take about 75% of the fees and burn Zero tokens with those fees. So trading venues can also opt, though, to hold and stake Zero for higher fee share tiers so that get more of that 75%. But all in all, a very good system. So the idea, though, is that LayerZero is not trying to create a front end here for Atlas. They really want to compete because they don't want to compete with trading venues, but instead offer them like a neutral infrastructure component so that they can build on top of it. And it doesn't become a question of why would I build on my competitor's infrastructure and not just build my own? The idea here is that by giving institutions this kind of base layer, it means that they are going to be able to build off of that and really work on building a sleek front end using kind of the benefits that the Zero blockchain offers, which is high throughput, security, and solves a lot of other kind of L1 issues. Zero token is up 31% on this so far. Okay, next up, we're going to talk about Zcash. So yesterday, asset manager Grayscale launched an ETF for Zcash, sending the privacy token higher. So this was actually the first. This will be the first ETF that Zcash has seen, and it's been a big bout performer in 2026. There's been a huge resurgence in the privacy narrative, coupled with anti-Bitcoin sentiment as institutional investors have kind of saturated the market, and so a lot of interest is push towards Zcash. Just to give you context, Zcash was up over 1,000% in the last year, and it's up just 55% year to date, which in a year where the majority of the crypto market is down is very, very good. The ETF launch is just going to allow investors to purchase ZEC exposure through their brokerage accounts without needing to custody the asset or use crypto native exchanges. Zcash reacted well, trading up 42% this week. Okay, last up, we're going to talk about Kinetiq. So I don't think I've talked about this one here, but Kinetiq is a liquid staking and trading venue on Hyperliquid's chain. And they announced this last week, the launch of Elysium, their layer 2. So Hyperliquid is best known for their perpetual futures exchange. They operate the layer 1 protocol, though, that the exchange and other products can run on, called the Hyper EVM. So Kinetiq initially launched as a liquid staking protocol for Hype, but it has since expanded to operate markets.xyz, which is a perpetual futures exchange for equities, indices, commodities, currencies, and pre-IPO assets, basically everything non-crypto. Kinetiq, though, claims that Hyper EVM is less than ideal for traders and builders, with limitations on its throughput and higher complexity. The proposed L2 Elysium would work to solve these issues using Hype as the native gas token, so no friction with using Kinetiq or another token for gas. And it would create a token launch platform, something that doesn't really exist on Hyperliquid right now. The Kinetiq team claims that unlike other L2s, which siphon value and fees away from the L1s they are built on top of, its L2 would create overall activity, which would flow back to Hyperliquid. For context, fees generated on Elysium will be split 25% to builders, 25% to the Kinetiq treasury for operations, and 50% will go to Kinetiq buybacks. Nice. Kinetiq is up 68% this week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.